Hello, so the probabilities played out from my previous video that it was a higher probability to move up, which we did, and we took out this high. But that kind of complicated a lot of things because you kind of need to recount this mess, this structure here, the corrective structure. So if I were to go into detail, it would take too long. So I just give a brief overview here. So this is the ABC, and then here you are looking for a 1 ABC. Here you can have a running flat in a wave 2, which would be finished here, and then you move up in a wave C, and then you move down. And then you have the running triangle, which is still very much in play. So A, B, C, D, E, and then you move down. And here it is just a matter of stretching this part now in a W and then ABC here. And then you have a wave Y here, and which is a wave B, and then you move up in a wave C, and then you move down, and so on. And then you have the finished impulse, which is the only pure bullish scenario, which we are finished here, and then 1A and then ABC here in an expanded flat looking for a wave C, which can be a running flat, meaning that we don't really have to take out this low, even though it is a higher probability, because a running flat is a low probability structure, but we can be finished here and then we move up. So these are all very much in play, but I choose now to focus on this part, because this part, if this is a MotiveWave or a corrective way, it affects this bigger picture quite a lot. So if we zoom in on this part here on the 1 hour chart, then you can see that we either can have a wave A or a wave 1 over here and looking for higher prices. So here is the bullish scenario where we are counting this as a wave A, B, C in a W, and then A, B, C in a wave X, and now looking for finishing an A, B, C in a wave Y here. Or this can also turn into a wave A, B, and then 1, 2, 3, 4, 5, C, a flat, and then we move up. So here is the low probability wave 2 target, meaning that if we hit 62.17.2.32, this has a low probability of being a wave 1. Then it is a higher probability of being a wave A if we move down here without taking out this invalidation, of course. So this is the bullish scenario, and this fits quite well because of the time here. Because if you have, in my other examples, which I will show you, if you have a finished move here, the time is very short for this move. So it fits better to have something finished over here. Then you have the time ratio here, which fits nicely. But time is never an invalidation, it's just a guideline. So the other two scenarios are both bearish. Here you are counting this as a wave 1, 2. Here is a leading diagonal, so 1, 2, 3, 4, 5, a leading diagonal like that. And then you have a lower degree, 1, 2, 3, 4, 5, looking for this 3, and then moving up in a 4, and then moving down in a wave 5. So if we move up here, the probabilities are low that we are then looking for this wave 4. Then this needs to be a wave 4 here. This is finished over here, and this 4 is then somewhere around here. But I've chosen not to include this count because this move down is not convincing as an impulse, meaning it is a higher probability of a corrective structure as of right now. So this is very much up for grabs as well. This is the invalidation. If we take out this, you don't want to change structure in a 1, 2, 1, 2. So therefore, this is the invalidation for this scenario. But you can see here that this is also finishing here, which have this great time ratio, or the more common time ratio between this pivot and this pivot, which is the higher probability for this scenario. And then we move on to the last scenario, which is an impulse. So 1, 2, 3, 4, 5 in a wave 1, 2, and then looking for a 3, 4, and then moving down in a wave 5. So here you don't need to move down in a wave 5 and take out this low. You can do that at a later stage, because if you get a 4 here and a 5 here, you can have a retracement and then you move down. The invalidation here is taking out this now without making a new low, basically. But this has a lower probability just because of this time ratio. It doesn't fit as well as the other two. So this is the one I am looking for if I'm looking at a bearish perspective, and I would definitely like to take out this, which then lowers the probabilities immensely for the bulls, because then they basically need to look for an A, B, and then move up in a wave C, which in turn make it so that it is bearish in the long run. But still, the bulls then will have a short-term bullish kind of celebration, if you put it like that. And the WXY also have an equal in probability to the 1212 bearish scenario, depending on how you want to count this move up. But as I mentioned, right now we are in a very messy kind of structure where a lot of accounts are possible. So it's better to focus now on the low time frames and let things pan out and to become clearer. But as I mentioned, here is the low probability wave 2 as I showed you, 62.17.2.32. And I also gotta include that if we hit this and not take out this, then it's a higher probability that this move is a wave B instead of a wave 2, which it can be if we count this as a wave 1. So that is something to take into consideration, because if we move down here and then move up in an impulse, the probabilities are that this impulse, it has a very much higher probability of being a wave C than it is a wave 3, because of us then taking out this low probability wave 2. That was a long explanation, but I hope you understood my point. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.